To continue our seminar, I have the pleasure to invite Mr. Peter Casey, who will be the speaker for the second session titled Enhancing Transparency in the Sukuk Market. Before he will start, I just wanted to tell you about Mr. Peter Casey, his brief bio. He's a consultant to the Islamic Financial Service Board and a member of the Legislative Committee of the Dubai Financial Service Authority. He is also a member of the International Advisory Board of the Emirates Securities and Commodities Authority and a consultant to the General Counsel for Islamic Banks and Financial Institutions. So, after this, please welcome Mr. Peter Casey.
Thank you very much. I hope everyone can hear me clearly. Yeah, I seem to have speech okay. I'm going to talk in two sessions today about transparency, focusing first on the Sukuk market and then on the collective investment scheme market. Because transparency is so important in the capital markets and capital markets regulation, inevitably what I say will overlap a little bit with what my colleague Amani was saying earlier. But I hope that seeing these issues from two perspectives will be helpful to you. Now, I know that there are some people listening to me who are really quite expert in the Islamic capital markets, but I suspect there will probably be some who are not, or whose expertise is in, for example, collective investment schemes, rather than in Sukuk. So I hope those who know the subject well will forgive me if I give a brief introduction to Sukuk. Sukuk is an Arabic word. It's actually an Arabic plural. It's the plural of the word sak, which means something like a certificate. It's often, the word Sukuk, though, is often used as singular, and people will say, the government of so-and-so has issued a Sukuk. I shall probably use it in that way myself during this talk. Essentially, don't fuss about that bit of the grammar. Sukuk are often referred to as Islamic bonds, and they are in many ways the nearest Islamic equivalent to bonds. Exactly how equivalent they are, though, is an interesting subject for discussion, and I shall come back to it later. Like other parts of modern Islamic finance, Sukuk are based on contracts which have been known generally from the early Islamic period, sometimes even from before that. And they will often be referred to by their Arabic names. So people will talk about an ijara Sukuk, and that is based on what is fundamentally a leasing contract, or a wakala Sukuk, which is based on a contract of agency, particularly for investment in this context. Several other terms available. There are, in fact, I think 14 contracts on which you can, in principle, base Sukuk. In fact, only about half a dozen of them are used at all commonly in practice. I said that Sukuk are the nearest Islamic equivalent to bonds. In practice, Sukuk are usually, not always, structured so that they replicate conventional bonds. That means that there is a predictable return, either predictable in numerical terms or sometimes tied to some other rate. It would once have been LIBOR. It means that there is an expectation that the principal will be repaid at the end of the period. And it means that the key risks to those expectations are from the default of generally one entity, perhaps a government, perhaps a firm, often referred to as an ultimate obliger. So economically, a lot of Sukuk are economically, let's say, very similar to a conventional bond. But it is possible to have Sukuk with quite different risk-return profiles. Indeed, many Sharia scholars, many other people around the Islamic finance world, believe that it would be better if Sukuk were so structured. and if Islamic finance were offering something qualitatively different. You could certainly structure Sukuk so that they really did depend on the performance of a limited group of underlying assets. You can construct convertible Sukuk. You can now construct Sukuk, and indeed many Islamic banks issue them, which are intended to fulfill the same role as contingent capital instruments would fill in the conventional world. So, although the Sukuk are commonly quite bond-like, this doesn't mean that whenever you see a Sukuk, it will look economically like a conventional bond. The structuring of Sukuk can be very complex, and I'd like to illustrate that. This is about as simple as a Sukuk as you are ever likely to see. And it's based on the Ijara contract. What will happen is that there is an originator, which is fundamentally, shall we say, a firm, let's suppose it's a telecoms company, that wants to raise some money. It will establish a special purpose vehicle. Usually, there are sometimes other ways of doing it, which will be both the issuer of the actual Sukuk and will also act as trustee for the Sukuk holders. So the originator will sell the assets to the SPV and take the sale proceeds. The SPV will issue the Sukuk. It will receive cash from the first investors, and it will also get a declaration of trust to act on their behalf. That SPV will then lease the assets back to the originator and will get rental payments from which it will make periodic distributions to the Sukuk holders. Actually, it won't probably distribute quite all the rental because assets probably need servicing. Suppose it's based on some telecoms towers. They will need maintenance. So the originator again will probably be appointed as the servicing agent and will be paid servicing costs. And so that's why the Sukuk holders don't get quite all the rental money. At the end of the period, the originator will buy back the assets under an undertaking which it's already given to do so, and a final amount will be paid to the Sukuk holders. As I said, that's about as simple as they get in practice. And if you look at that, there's something like 6 or 7 distinct documents involved in putting together that Sukuk structure. Now, I said that was an easy one. Here's a complicated one. I'm not going to walk through this at all. It was for a real Sukuk. It involved a set of guarantees from export credit agencies. There were 30 separate documents in total making up the package. And in Shari'ah, a number of be independent of each other. So you have what may be legally quite a complex net of contracts and, in some cases, one-way undertakings. And that is important to some of the regulatory issues that arise. Before I go through the disclosure issues, I would like to comment on some aspects of the Sukuk markets. One key aspect is that those markets are generally institutional rather than retail. A few countries have a few retail Sukuk, often issued by governments as national savings schemes. But just as corporate bond markets, the government bond markets, are not generally retail, nor are Sukuk, most Sukuk holders will be institutional. Sometimes Sukuk will be deliberately structured in large sizes so that they are really only practicable for large-scale investors. that it can be in some ways helpful to a regulator. Second thing to be said about Sukuk is they trade very little, and such trading as they do is largely over the counter. Again, there's a resemblance to the bond markets, but it's even more true of Sukuk. And that's probably because Islamic banks and other financial institutions find Sukuk very attractive to hold. There aren't as many of them as they would like, and so they typically tend to follow a buy and hold model. So don't assume that any exchange will ever get rich on the fees from Sukuk trading. Might just get rich on listing fees, but not from trading. Furthermore, as Amani's presentation had shown, most Sukuk are issued either by governments or by multilateral institutions. As a result, they're likely to be exempt from regulation, at least of the primary offer. Most capital markets regulators don't regulate their own government's issues, and the big multilaterals like the IMF group won't issue in a place where they have to be regulated. But on the other hand, they do normally follow good market practice, and so if you have a good regime, the odds are that they will follow it. In the Sukuk markets, multiple listings are common. Sukuk will commonly be listed on at least 2 exchanges, sometimes as many as 4. And one of the tricky issues is that because they don't trade very much, some of those are likely to be what I would call compliance listings. They are supposed to give everybody some confidence that the issuance is regulated properly, but some of those exchanges may have very limited incentives to enforce disclosures beyond the initial offer. If that hypothetical telecoms company is running into trouble, will all the exchanges on which Sukuk are listed actually make sure it makes the proper disclosures? That's always an issue for a regulator. Some other characteristics of the Sukuk markets that impact on regulation. The first and the very, very obvious one is that Sukuk are intended to be Sharia compliant. But there are differences, even between very learned scholars, about what is involved in Sharia compliance. So you cannot necessarily assume that even if a set of scholars in some place have in good faith given a fatwa, a resolution that something is compliant, that this will necessarily be accepted by everybody else. And we've all seen Sukuk issued and Islamic banks elsewhere turn up their nose and say, we don't think this is compliant, we're not going to buy it. Second issue, which I've already alluded to, is that the documentation is complex. I've said enough about that for the moment. A tricky one is that some Sukuk are not considered to be tradable, or strictly only tradable at par. And that's because some of them are based on debt-creating contracts. And the large majority of Sukuk, of Sharia scholars, will say that Sukuk based on such contracts cannot be traded except at the value of the outstanding debt, which really doesn't give you a market. Some disagree, and that position would not necessarily be taken in Malaysia. And of course, you have tricky issues if you have so-called hybrid Sukuk, in which they're partly based on one thing and partly on another. How much debt do you need to have in there before the thing becomes untradeable? And again, learned Sharia scholars will disagree on that. But tradability may clearly be an issue. And you may have a Sukuk which is being admitted nominally to trading on a market, but where the vast majority of scholars say this should not be tradable. There is at least one famous real example. As you will have seen from the diagram earlier, the actual issuer of the Sukuk is normally a special purpose vehicle. It has essentially minimal business of its own, but the economic dependence is normally on the obliger or originator, the firm or the government that has promised, in the case of an Ijara Sukuk, to pay the rent for the assets, and that has probably also made a promise to buy them out at the end of the period. That has some regulatory implications. Sukuk often also involve other claims. Increasingly these days, they will make claims of being green or socially responsible or aligned with the Sustainable Development Goals. In principle, there is nothing different there from making those claims on behalf of a conventional instrument. But the aims of Islamic finance to be a principled system of finance perhaps mean that such claims will be made more commonly about Sukuk than they might be about conventional bonds. Again, I'll return to that briefly. So, what are the fundamentals of an approach to disclosure in the case of Sukuk? The obvious point, which I think most regulators would agree, is that if you have any instrument which is traded dominantly in institutional markets, then disclosure is going to be your key regulatory tool. You can generally assume that the investors are able to look after themselves, provided they have the information to do so. And of course, we're talking about both initial disclosures at prospectus or offer document level, and the continuing disclosures, say, about financial prospects in the future, all the things you would normally disclose to an exchange. Many of those basic disclosures will be common with conventional securities. Of course, you will have to disclose the company, its place of business, the names of its directors, its financial results for the last however many years. Please just take it for granted that those disclosures will be in the regulatory regime, and I don't need to spend much more time about them. The same thing applies to the other kinds of claims I've referred to, things like claims of greenness or social responsibility. As I've said, they may be more common, but your attitude to whether they are justified or not will, I suggest, be exactly similar to the way you would deal with such claims for a conventional bond. The one key difference is that disclosures need to be made about the originator and the obliger. That hypothetical telecoms company is the one whose business fortunes investors are really, really interested in, which will not necessarily, indeed not normally, be the entity that has issued the Sukuk. That will be an SPV. So if you've written a disclosure regime that says the issuer must disclose XYZ, that doesn't get you far enough. In the case of Sukuk, you will also need to get behind that issuer, the SPV, to the originator or obliger. There is an IFSB standard, AIFSB 19, that deals in some detail with disclosures, both for Sukuk and for Islamic collective investment schemes. Much of what I say here will be based on that standard, but I am not going to work my way through the standard in detail. It is, of course, available for you to read, and much of the detail will probably be easier to digest in written form. So I shall be giving you some highlights of it, not necessarily the whole thing. The standard sets out some basic principles of disclosure. which just apply just about across capital markets. The first one is that disclosures should be clear and accurate. Accurate, I think, speaks for itself. What is clear, of course, depends on the market. And in an institutional market, you can reasonably assume that institutions will have access to legal advice, accounting advice, Shari'ah advice if they want it, and be able to interpret quite complex documents in quite complex language. Disclosures will need to be sufficient, tell them everything they reasonably need to know, and of course timely. That's mainly an issue about continuing disclosure. For example, about the business prospects of an ultimate obliger. But what do they need to be about? Well, the first thing is to say that the fundamentals of the disclosure regime need to follow the economic and the risk reality. Don't just assume that all Sukuk will be bond-like. They may not. Taking my point slightly out of order, sometimes there will be real elements of equity-like risk. It's fairly obvious if you have convertibles or regulatory capital Sukuk issued by a bank. Yeah. The degree of risk associated with those, and therefore their pricing, will at least have equity-like characters. You may indeed have a real project Sukuk in which the returns actually are dependent on, say, some big infrastructure project which is going to earn returns, say a power station. On the other hand, sometimes you will find that the documentation will suggest that the structure is very much asset-based, asset-backed, and that the risks are those of some assets. But when you analyze in any detail at all, you see that the risks are concerned with the failure of the obliger. As a regulator, it is helpful at least to have some tools available which will enable you to say the disclosure regime should mirror the economic reality rather than shoving them all into a box with conventional bonds. Now, the area of disclosures which really distinguish Sukuk from any conventional instrument are, of course, the Shari'ah disclosures. And the things you would normally expect in a disclosure regime are fundamentally, is there a Shari'ah ruling, a fatwa, that has said this is compliant? And if so, who gave it? And you would expect not only to know what Shari'ah body it was, it's perhaps the advisors to one of the investment banks advising on the issue, but also the names of the scholars behind it. Because after all, somebody at the other end is going to be judging whether they are confident that this is actually compliant, and they may be judging that on the basis of those who have given the ruling. What was the process? Especially, did that Shari'ah board review all the documentation? There have been cases in the past where they did not. There is an increasing push, I think, for disclosure of at least the basics of the reasoning that underlay that fatwa. That is something that hasn't always been disclosed in the past. But there have been a few controversial cases where people have looked, scratched their heads and said, how on earth did the scholars conclude that that was compliant? But sometimes, you know, I have been in that position. I've looked at an issuance, and even I, not a Shari'ah scholar, of course, have scratched my head and said, I wonder how they concluded that was okay. And there has actually been good reasoning behind it. But sometimes having that reasoning disclosed can be enormously helpful to those assessing whether buying or holding that sukuk is compliant with their Sharia understanding. Some other issues you would be interested in. Clearly, what are the underlying assets? And associated with that, of course, are those assets actually Sharia compliant? In many cases, the answer to that will be obvious, but not necessarily. For example, if you have sukuk based on a set of office buildings, that's likely to be compliant, but what happens if a floor of one of them is rented to a conventional bank? In that case, the asset will not be, at any rate, wholly compliant. And so disclosures on that will be significant. I've already touched on the issue of tradability of the sukuk. You would expect there to be disclosures of anything that impairs tradability. Clearly, the ability to sell the sukuk if you need to liquidate some investments is a significant attribute which is relevant to pricing. And if the sukuk is not considered tradable, then that is something that should be disclosed. A couple of other issues concerned with Sharia. The first and fairly straightforward one is, will any of the entities in the chain be deducting zakat, the wealth tax, effectively, that Muslims have to pay on certain of their assets? The answer may well be no. It occurs only in a relatively small number of cases that one of those entities deducts. But even if zakat is not being deducted at any point in the chain, that fact, it should be disclosed because it means that the individual holders have the responsibility of paying that zakat themselves. Zakat, of course, should be channeled to charity under some rules set normally by the Sharia board. What about non-compliant income? Again, in principle, if there is any income that is not Sharia compliant, that again should be channeled to charity under a process agreed by a Sharia board. You might say to me, well, if everything in the chain is compliant, how can there be any non-compliant income? Yeah, maybe it's not quite compliant. Maybe you do have an underlying asset of which a very small amount, which generates a very small amount of non-compliant income. Perhaps a huge shopping mall with a conventional bank occupying one unit. Maybe the scholars will say, yes, you can legitimately hold that asset, but some non-complying income must be given to charity. Maybe an asset that was compliant when you started enters non-compliance. You know, the office building was fine until somebody rented one of the units to that conventional bank. So you may have non-compliant income and its treatment should be specified. A tricky issue, again, something not often disclosed, but which the AIFSB certainly thinks should be disclosed, is what provisions do you have for Sharia advice on anything that may pop up during the lifetime of the sukuk? I've already given a couple of examples of how non-compliant income may become an issue. Perhaps there will be some proposal for restructuring. Various things may happen that raise Sharia questions during the lifetime. What are the arrangements for dealing with those? And one that is really quite difficult and the subject of a lot of debate. What role does Sharia have in the interpretation of all the contracts and undertakings that are given? Remember, I've said there is a complex structure here. There may be up to 30 separate contracts and undertakings, and they may be given under the laws of several countries. If any of them are challenged in a court, Will the court apply Sharia in any way? And if so, how? Now, I'm not trying to say what the conclusion to that should be, but it may at least be significant to holders to know whether Sharia will play a part in the interpretation of those contracts. So those are some areas for disclosure specifically around Sharia matters. There will also be disclosures, I suggest, about structural issues. You would expect a summary of the principal contracts that make up the Sukuk structure. And you would expect to see a structure diagram. I've already shown you 2 examples of what a structure diagram might look like. That gives potential holders the ability to look and see whether all of these things do actually work together. And don't forget, they need to work together in bad times as well as good. Yes, if everything is going beautifully, if everybody is getting the money they were expecting to get, everybody's happy to pay it, no real problem around the structures. But remember, things can go wrong. Our hypothetical telecoms company may be falling on hard times. It may be trying to argue that it should reduce its payments under the Sukuk or restructure it. If the company is falling into hard times, it's equally possible that some of the Sukuk have fallen into the hands of a vulture fund whose basic mode of operation is to make life difficult for people until they get paid off. In that case, there may be 2 parties that have an interest in prizing apart that structure and saying, there is a gap here. We are not actually obliged to do all the things that we said we were going to. Or on the other hand, I can force you to do so and so by threatening to seize such and such. So it's going to be important for investors to take their own view of how secure that structure is, whether it will really do what it's supposed to, even if someone doesn't want it to. Clearly, you will want a disclosure about what the ultimate source of payments is. Where is the money really coming from to pay out the Sukuk holders? And that is associated with the next issue, which is rights over assets. Suppose you do have a simple Ijara structure. You have transferred, shall we say, those telecoms towers into the special purpose vehicle. How thoroughly have you transferred them? Does it have full legal ownership? Does it have a long lease? Does it have something a little more nebulous? A concept of usufruct, perhaps. Which raises the question, of course, if things go wrong, do the Sukuk holders or a trustee on their behalf actually own the assets? In law, can they take hold of them and sell them, perhaps to another telecoms company who can operate those towers? Or can they not? And this may not be straightforward. The assets may be in a country where foreigners cannot necessarily hold real estate. Too bad if the assets are actually an office block. Even if you can seize the assets, can you use them? Again, can you actually, going back to the telecoms example, seize and use those telecoms towers without having to have a whole string of new licenses from a body that may not want to give them to you? That is quite aside from the question of whether, if you could get the assets you would want to, it may not be easy actually to operate a set of telecoms towers in a foreign country. But that's quite another matter. There's still the underlying issue of, do you have the right to the assets? And that very often gets glossed over in Sukuk documentation. Couple of straightforward things: cross-default provisions. It's normal in Sukuk as in conventional bonds for there to be a provision that says that if the ultimate obliger defaults on any of the securities that it's issued, then it defaults on all of them. That just stops the obliger from picking out some of its investors to favor at the expense of others. So you would expect some cross-default provisions. There will be specific issues for specific contracts. For example, if you use a contract called Mudaraba, which is a sort of silent partnership, then the way that profits are going to be shared under it is a matter for disclosure. There's a whole string of those, and AIFC2021 discusses them in detail for the main specific contracts. I shall not worry you with those now. What I would like to do is just to get my head out of the details of disclosure for a little and to think about where this might go in the future. Now, I've talked about Sukuk markets as they currently are. One of the issues that interests many people around the Sukuk market is, will we move from a largely institutional market to a significantly retail one? Will technology make that possible, either by reducing the costs of Sukuk trading or by reducing the costs of Sukuk issuance, allowing smaller sizes to be possible? Much argument about that. It may or may not happen. But were you to get to anything like a retail market, you would have some quite different issues about disclosure, because you would have to ask questions about what disclosures retail investors can understand. Yeah. A 200+ page prospectus, which would not be uncommon in the Sukuk market, as it currently stands, is something that you cannot practically expect retail investors to understand. How can you give them disclosures that make sense to them, that tell them what they need to know? And were a retail market to arise, would you as regulators need to consider using other tools? For example, would you need to regulate the product much more carefully? For example, as regards Shari'ah compliance? Would you need to use other tools like suitability to ensure that retail consumers are only offered products which are suitable for them? Those are regulatory issues which arise in a different context in collective investment schemes, which are largely retail, and which I will talk about in our next session. But for the moment, I'm very happy to take any questions.